All right, welcome back to The Explainer. Today, we're going to fundamentally rewire how we think about regulatory readiness in modern finance. We're pulling some incredible insights directly from a piece by FinEdge Dispatch, and it's called Compliance as Capital. Now look, if you work anywhere near fintech, digital banking, or financial infrastructure, you already know the collective groan that usually happens the second someone brings up compliance, right? It's the regulatory landscape shifting under our feet constantly. But instead of looking at this as just another growing burden, we're going to explore how top-tier organizations are completely flipping the script. They're actually turning compliance into a massive competitive advantage. So let's get right into it.
So let's just dive right in. Is compliance just a cost center? Well, for decades, the answer to that question was just a huge, resounding yes. Compliance was historically treated as, a purely defensive necessity. It was this back office function, mostly designed to minimize your legal exposure, keep the regulators happy, and with any luck, prevent a catastrophic operational meltdown. It was literally just the cost of doing business, an administrative chore that you just had to grit your teeth and get through. But here's the reality check. That whole framework, it's completely breaking down. It is simply no longer sufficient. And why is that? Well, because we aren't operating in an analog financial world anymore. Trying to use that old playbook today is honestly like trying to navigate a hypersonic jet using a folded-up paper map from a gas station. In today's real-time programmable markets, relying on a reactive, defensive posture just does not work. If you're only thinking about compliance when a regulator comes knocking on your door, honestly, you're already miles behind.
Which brings us to part one, the end of reactive compliance. We're talking about moving way beyond just manual defense.
Think about the old era for a second. We relied entirely on reactive compliance. That model was totally built around fixing issues after the fact, trying to manage exposure through these clunky, fragmented manual processes. It just created incredibly slow, bottlenecked workflows. But then look at modern infrastructure. Today's financial systems run on APIs, extreme automation, interconnected platforms, and continuous verification. In this new era, the complexity is off the charts, which makes trust absolutely invaluable. And in regulated markets, your technical capability to be compliant is literally the exact thing that creates that trust.
All right, moving to part two. Compliance is now capital, shifting from a support function to a literal performance multiplier.
And this right here brilliantly illustrates exactly how that transformation happens in the real world. Take automated KYC and AML, for example. Instead of a customer waiting, say, 3 days to be manually approved, it takes 3 seconds. The business impact there? Massive. You get significantly faster customer onboarding. Or how about real-time monitoring? That translates directly to vastly improved risk visibility across your entire enterprise. Audit-ready infrastructure means you fly through institutional approvals. Centralized governance? That gives you much greater scalability. And transparent controls directly lead to increased investor confidence. I mean, this proves it, right? Compliance isn't an administrative burden anymore. It's actual operational capital driving your business forward.
So if we distill all of that down, it really boils down to this core trio of enterprise outcomes: speed, visibility, and trust. Every single modern compliance capability directly levels up one of these 3 metrics. And what's really powerful is how these efficiencies compound over time. Look, if you're an operator or a founder listening to this, I know these are the metrics keeping you up at night. Firms with strong regulatory infrastructure just move faster, plain and simple, because their approvals accelerate and their operational uncertainty drops. In a high-growth fintech environment, speed and trust aren't competing against each other, they're directly linked. Section 3, Building Trust Infrastructure. We're getting into system-driven integrity.
Think about how trust used to work. Back in previous financial eras, trust relied super heavily on, having a giant marble building and recognizable institutional branding. But let's be real, a fancy lobby doesn't stop a multi-million-dollar regulatory fine. Today, trust is entirely system-driven. The markets prioritize systems that are verifiable, transparent, auditable, and resilient. And this is absolutely crucial in spaces like embedded finance, open banking, digital assets, and cross-border payments. In these highly automated sectors, the firms that can mathematically, systematically demonstrate their integrity, they're the ones gaining a disproportionate amount of strategic leverage.
And as a result, we are seeing this massive divide open up across the industry. On one side, you've got firms treating compliance like it's just an administrative chore, relying on manual oversight that inevitably causes huge, grinding bottlenecks the exact second the company tries to scale. But then, on the flip side,
Forward-looking firms are treating compliance as a scalable infrastructure layer. They're baking automated governance, API-based controls, and immutable audit trails right into their core architecture. Because their goal isn't just to align with regulations, it's to enable sustainable, high-speed expansion. Okay, part 4, the investor premium, repricing regulatory resilience. You better believe investors are paying very close attention to this. They're increasingly viewing a company's compliance maturity as a direct leading indicator of its overall operational quality. This is especially true in fintech and digital assets, where regulatory uncertainty is super high, and honestly, governance weaknesses can literally decimate a valuation overnight. When investors look under the hood and see a strong compliance architecture, they aren't just seeing rule following. They see organizational discipline. They see reduced operational fragility. They see lower reputational risk. And ultimately, they see much stronger long-term survivability. In today's volatile markets, resilience itself is being repriced as a premium asset.
Section 5, the AI compliance divide, accelerating the gap.
Now, what's absolutely fascinating here is how artificial intelligence is rapidly, completely reshaping the underlying economics of compliance. AI-driven systems are drastically accelerating fraud detection, instantly spotting anomalies, automating all that complex reporting, and deepening risk analysis. And guys, these aren't just incremental improvements, right? Actually, scratch that. They aren't incremental at all. They are exponential leaps in capability. And because of this, AI is going to violently widen the gap between competitors in the financial space.
If your firm is still dependent on manual oversight, you are basically trapped with higher operational costs and significantly slower decision cycles. Every single time you want to grow, you're forced to hire linearly just to manage the compliance load. But conversely, the firms utilizing modern AI-assisted infrastructure, they get the benefit of continuously lowering their costs per transaction, incredible scalability, and way stronger institutional confidence. The manual firm is essentially trying to outrun a sports car while riding a bicycle. The organizations that decide to modernize early are absolutely going to capture the market. Wrapping things up with Section 6, the strategic reframe. It is a massive conceptual shift.
So, the absolute crucial point boils down to this quote right here. Financial systems are entering an era where verification matters more than narrative. You can have the absolute best marketing, the slickest app interface, the most compelling brand story in the world. But if you cannot verify your operational integrity at the actual infrastructure level, your narrative is not going to save you. Compliance just cannot be viewed solely as legal protection or operational overhead anymore. It functions as your trust infrastructure, your institutional signaling, and, most importantly, your strategic enablement.
Which leaves us with a pretty heavy but vital question for you to take back to your teams. As automation, AI, and digital infrastructure continue to completely reshape our markets, will your regulatory readiness be just protection? Just an administrative chore keeping you playing defense? Or are you going to embed trust directly into your operations and transform compliance into your most powerful operational leverage? Think about where your organization stands right now. Thanks so much for joining me on this explainer, and keep learning.